Hi, this is Mark Carrington from mybitcoinprofits.com with the regular review of Bitcoin price and Bitcoin markets. Remember, our last review was on August 9th, and we were talking about trading opportunities after the Bitfinex hack had dramatically reduced the Bitcoin price. Not a lot has happened since August the 9th. It's now August the 26th. So let's go to the charts. And let's see what has actually happened. So here's August the 9th, and the price is actually pulled back. It sort of touched $600 once, and it's pulled back, and it's been tracking pretty well sideways for a couple of weeks now. Remember, our trade idea that we were looking for is I'd drawn a Fibonacci line in here, and I was looking at trading somewhere in the zone, maybe pulling back to this horizontal line and then trading along, but I was always uncomfortable with the trade because to work, the buyers are here and the sellers are here, and we're trading somewhere in the middle. And I've drawn this purple line in because that reflecting the halfway mark between the two, and markets do like to find equilibrium, and that's exactly what this market is doing. It has found the equilibrium around that halfway mark. Now, as it happens, I did have a go at making a trade. So the trade here, this was made on the 10th of August. And I'm using a daily chart here, and the price had gapped just here. And a gap is quite often a powerful place, because what it tends to do is it puts a support line in below the gap. So when price breaks above the gap, you can put your support, your stop loss below that support line in the gap. So that's what I've done, is I put a trade in at 594. Well, this was the order that I put in at 594. I was triggered when it touched through to reach that 600 mark, and stopped out about 5 days later when the price dropped below where the stop loss was, which was 567. I think I tightened my stop loss up a little bit. I think I lost at 569. So it cost me $250. So that's a risky trade. I knew it was a risky trade, and I paid the price for being risky, and probably won't be doing that again. So I'm certainly going to be waiting for Bitcoin action to clear. To give me a clear pull into this trading zone area, and then to give me solid reversal. But while the prices are not moving along very happily, I'm not going to be doing anything. But I'm going to talk about something else. Because I was sitting last night on the 25th of August US time, watching market activity, and we'll see that. So that's this bar here. Yesterday is the 25th. That's the 26th. So this is in my time zone, and the high and low for that day. The high is 582. The low is 574. So that's a mere $8. $8 over 574 is a very small move. And let's just calculate how small a move it is. 8 divided by 574 is 0.1%. So that is a very small move. So let's go and have a look at some of the other markets. So the announcement is made in here, and we've got that very small move. Let's see what happens in the other markets. I had a trade on US dollar against the Swiss franc, and we get this massive movement. Now, the importance of this massive movement, so prices opened at a level and dropped and raced up. As it happens, my stop loss I got taken out of the stop loss because my stop loss was in below the low of this day, So I lost a trade on what was actually a winning trade. The importance of this is that, let's take the size of this, is that there are not too many days where we see moves that big. There are moves that big, but there are not too many days. There are certainly some, but there are not too many. And this move happened entirely because of a speech. And we look in, this is the euro against the US dollar, also a daily. I had a trade on this looking to go short, but it was, I'd taken it off a couple of days ago, and here we see the size of this bar. It's bigger than that move, it's bigger than that move, it's bigger than that move. It's not as big as that move because that's the move directly after the Brexit vote. This is the move when the Brexit poll showed some surprising numbers, but we pretty well don't see days here. I mean, the 14, we'd have to go and have a look and see what happened on the 10th of March. I wouldn't be surprised that's when Mario Draghi was talking. We see the same in the pound. The pound has actually been in quite a narrow trading range. So the highs and lows for the day. Make this one the same size, and let's just go and show. Let's move that box out of the way so we can actually see, or you can actually see. So so some days, so it wasn't as big as some of the days, and it's certainly dwarfed by the Brexit day. This is the Brexit day. So those are all the crosses against the US dollar. Let's just do one more. You'll see the Canadian dollar exactly the same. We'll see the Aussie dollar exactly the same. This massive move down and then the move up. So this is where it finished. And given the words in his speech, the amazing thing is markets don't wait for the words in the speech. We should be seeing US dollar strengthening, so this chart going down, and that's ultimately where the market is settled. You see it happening also in the crosses. The Euro GBP was actually quite modest because a lot of the move had happened in the days before. We see it in the US dollar euro against the yen. And I will do the last one. I will pick out gold price. So this massive move here, the price, that's the opening prices here for the day. There's the close, and we've got this massive move like this during the course of the day. Now what's going on here? What's going on here is the markets are starting to become dominated by the central bankers, and the attraction I have is that when we look at Bitcoin, we had a 0.1% move on a day when all the other currency pairs had a trading range that was wider than their normal range. And if we just go and step across to I did a Google search on Yellen's speech looking at news. And as we go, these sorts of headlines, why Yellen's speech could rattle the currency market. Futures are doing nothing ahead of Yellen's big speech. Markets live, frozen ahead of the Fed. It brings into mind, what is the role of the central banker? Well, it seems that the central bankers are becoming a very strong influence in markets. So I've got to just go and dig in and found out some articles on what central bankers are supposed to be doing. I found this one here. It's just the main roles of a central bank. Central bank regulates and supervises depository institutions. The main roles: ensure monetary stability, particularly to keep inflation low and stable. That was the core role of the Federal Reserve. And then following the GFC and the Great Depression of 2008, They took on this role to ensure financial stability and to have a resilient and efficient financial system. And then, which is allied to it, to have effective policy for risk management and control supervision. And when I studied economics all those years ago, this is what central bankers were supposed to be doing. But there's more. We've got to enforce anti-money laundering, we've got to enhance economic development, we've got to create a sound payment system, we need a real-time gross settlement. That's all to do with payments, that's fine. To play the role of economic and financial advisor to the government, to help in government borrowing, to represent, to do. This is becoming a long list of very invasive activity from somebody whose prime role is to ensure monetary stability and to ensure financial stability. So I've dug out a few articles. There's an article on in The Economist. And when The Economist starts to write, you start paying attention. The central bankers develop dilemma. This is March 24th, 2016. So this was even before the Brexit vote. There's a picture of Mark Carney, who's the head of the Bank of England. They've taken the brunt of supporting the global economy ever since 2009. That is not what central bankers are supposed to be doing. The next article is from The Banker, which is a very reputable magazine on the whole subject of banking, and it says, so the whole article, it says the rising role of central bank in monetary policies, and this is their 4 conclusions. The first conclusion: price stability is a necessary but not a sufficient condition. That was the core mandate for the Federal Reserve, price stability. So the first one says that's not enough. The second one follows from the first. The procyclicality of financial intermediation can affect macroeconomic stability. So that is drawing a role into influencing market asset prices. Financial and prudential regulation can smooth the procyclicality of the financial sector. And fourth conclusion, the crisis has rekindled a debate on the necessity of coordinating fiscal, monetary and prudential regulatory policy in order to preserve stability. So we're no longer are we living in a world where the central banks are looking after monetary policy because they believe they have a role in fiscal, monetary and prudential regulatory policy. And that's ultimately why Bitcoin becomes very interesting to me. So here we sit. Bloomberg.com is the headline. Yellen sides of the Fed camp professing faith in price forecasts. But this is the article that really struck me. Central banks may need to start thinking about losing weight. I'm not going to go into that into too much, but ECB's quantitative easing will swell total assets until at least the end of the year. This is the size of the ECB's asset base. It is absolutely massive. The Fed's balance sheet used to be the leanest in the business. Look at this thing now. These are out of control. They think they're in control, but we do not know what the consequences of this are going to be. And hence, my thought is that Bitcoin is going to be a very exciting place to be. And that once we find that trade area, it is going to break these highs, find a base here, and then it's going to be heading up. So that's what I'm looking for. I'm looking for, as these arrows indicate, similar to last time, is to pull down and to be looking to go long. I will continue my Bitcoin mining activity, but that is my view, my thoughts on Bitcoin and the role of central banking. Happy Bitcoining and happy trading.